A lot of buzz right now going around Bitcoin, whether it's the current price of it or the new ETF that just launched. I'm going to talk about a couple of things, why you should pay attention to what Bitcoin is doing, and talk about the new ETF itself. Bitcoin right now is trading over $60,000. And if you go back a year, it was just over $10,000. It has made a huge climb up, and people are starting to notice again. For those out there that don't really understand what Bitcoin is or cryptocurrencies, it is a digital currency equivalent to, let's just say, the US dollar that allows you to buy goods and services. And a lot more businesses, Tesla being one of the mainstream ones, are allowing you to buy their goods and services. In short, it's just another type of currency outside of the traditional ones that we currently have. What makes it complicated and a bit risky, sure, it's new, but it's also not backed up by any type of government agency. It is supposed to decentralize what the current financial system is. For those already invested in Bitcoin, you might have heard about the new ETF that just rolled out this past week, something that has been long in the making. Now it's here, but there's something that you should know about whether this is something right for you. And one key distinguishment, and that is this is not an ETF where you're actually holding actual Bitcoins. This is an ETF that actually invests in futures. In a quick, simple explanation, what futures mean, it is a derivative based off what the actual price of Bitcoin is doing. And maybe in more simple form, it's a contract of what the price will be of Bitcoin in the future that allows you to have some type of investment that correlates along with the Bitcoin itself. So things that you can expect is if the price of Bitcoin continues to go up, the ETF itself, based on the futures contracts, will continue to go up and vice versa. I don't want to get too technical here, but it is something that I want to make sure you understand, that this new ETF is not invested in the actual Bitcoin itself. It is invested in futures, which behave a little bit differently opposed to the actual asset. So it is a great alternative. Word to the wise, you just want to make sure that you don't put enough where if things do go south, it puts you in a much tougher position to recover. Hope that helps everyone understand Bitcoin a little bit, why you should pay attention to it, why everyone seems to be talking about it right now, and the key differentiator between Bitcoin itself and this new Bitcoin ETF.